Good day, everyone. This is the second part of government accounting, which will talk about the accounting procedures, like journalizing, particularly, and also putting some inputs or amounts to the different registries involved in government accounting processes, as well as the other items. So let's have it here. Our continuation, accounting procedures for books of government agency. The discussions here are typically on the part of an agency of the national government. May that be, for example, a department, a bureau, commission, or any political subdivision, including government-owned and controlled corporations or GOCCs. However, explanations to many administrative details shall be omitted. So only accounting-wise will be included here. Firstly, we have to know the differences between three items: appropriations, allotments, and notice of cash allocation. If we say appropriation, this simply means the formal authorization that comes from the bill, the legislative act for an agency to incur expenditures up to a stated sum for specified purposes within a given period of time, subject to certain conditions. So this is now coming from the legislative branch of the government. So this is the Congress composed of the Senate and House of Representatives. So this is the bill in accordance to the budget being submitted by the different government agencies from their levels to the national levels and consolidated by DBM, submitted to the president and president forwarded to the Senate. So that was a short recap of the budgetary procedures. So another one is now on the part of the DBM. Appropriation is on the part of the legislative branch. Allotment and NCA will be on the part of DBM. What's the difference? For allotment, that is for the allowance to incur obligations based on the appropriation. If the Congress would appropriate, for example, 1 million, okay, that's little, but let's just say for the purposes of explanation and discussion, 1 million for a particular agency, the allotment may not be equal to that 1 million yet. All right, so it could be a certain amount, but of course it can reach the budget 1 million, not exceed that. Otherwise, it will be out of budget, and that's bad. That's unfavorable. On the other hand, for NCA, this is now out of the obligations being given or authorized by DBM to the agency. The DBM authorizes the particular agency to disburse by checks called the MDS, the Modified Disbursement System, by a certain amount within a specified period. So basically, the NCA is an internal control procedure. It's a control device designed to ensure that all withdrawals are within the cash allocation. So that's very important. Otherwise, the withdrawals are going to exceed or whatnot about that. Then on the part of the agency, how will be these three to be recognized or recorded? For the appropriation, there would be the registry called Registry of Appropriations and Allotments. So that's a registry, by the way. So it's like a ledger, or if you can recall a subsidiary ledger in the practice set in accounting one, that's how it looks like. There would be the date, there would be the appropriation, then the allotment, and the balance. So appropriation is the plus, allotment is the minus, and there's the balance. So that's the RAPAL, or some would be using the acronym. Then what about the allotment? That will be in a form also of an entry in the registry. So as what I've said, there is the so-called the Registry of Appropriations and Allotments, or RAPAL, and there would also be other registries to be used. So example would be the registries of allotments and the notice of cash allocation. So ran ka. Anyway, in that case, allotments would be the plus and CA would be the minus. And there's the balance now of the allotments. So appropriation and allotments would be in a form of memorandum entry, or the amounts will be placed or recorded on the registries appropriately. On the other hand, the NCA will be recorded by the agency really in a form of a journal entry, wherein the receipt of the cash will be this particular account, Cash National Treasury MDS, whereas the subsequent credit would be subsidy income from national government. So take note that we should be putting or placing the account titles correctly, not abbreviate them. Although if you are using, for example, the ENGAS, Electronic New Government Accounting System, which I will show this one, so clearly there wouldn't be much of a problem in writing because it's computerized now with the electronic there. And with that, there's a software ready, everything can be recorded, and the reports to be made later on or furnished can be clickable. So our discussions would be based on the ENGAS, by the way. To continue, we have what will be the treatment in case that the notice of cash allocation is without taxes or with taxes. So there will be an adjusting entry that would be made at the end of a period. So example 10 will be the amount of withholding tax. If it's not stated, remember we assume that it's 10% withholding tax. So 10% of 100 is 10. Due to BIR debit, credit subsidy income from national government. So in that case, if that is already net of the taxes, meaning we are already relieved by the liability or obligation to remit that to the BIR in that situation. So debit due to BIR, and then it's like we are receiving subsidy income from the national government. On the other hand, if it is with taxes, so we have to pay it. Debit due to BIR 10 and credit cash National Treasury MDS 10. All right, so that's what we can do then. Meaning it's a minus to the cash available. All right, so that's it for the two. Question, what if it's silent? Meaning it's not stated in the problem as to whether the NCA is without taxes or with taxes. So we're just going to simply assume that the amount received is net of taxes. Right, that's for accounting for the two A's, appropriations and allotments, and the NCA or notice of cash allocation. Next, what about accounting for obligations? As what it said in our discussions is that in government accounting, we still have to follow the basic concepts in financial accounting and reporting that if there is an order that's still not going to result to obligation, only when goods or services are delivered and received by us that we will recognize now the obligation if that is normally done in credit or on credit terms, which is basically normal in government accounting. We also acquire goods and services in respective terms or accounts or credit. All right. And then there is an obligation because of obligation accounting that is used by the government. But financially speaking, in terms of financial accounting, it's not really yet an obligation unless goods and services are being received or delivered to us, as what I've indicated a while ago. So what do we do then? We simply have to record the obligations in the RAO. So allotments and obligations. The allotments would be the pluses and the obligations would be the minuses, so that we will now determine how much really is the balance of our allotments. And then the RAO later on, of course, will be utilized by us. But remember in the discussion on the registries, we have the RAO respectively for the three expenses the personal services, the MOOE, that is maintenance and other operating expenses, the FE, financial expenses, and in addition, for our long-term or non-current assets, the CO, capital outlay. So the RAOPS, RAUMO, RAOFE, and RAUCO. So those obligations are important just to make our discussions easier. Next, for disbursements, out of these obligations, we have to pay them if proper. So as what I've said, you have here the free, and the fourth one is capital outlay. Then the fifth one would be the miscellaneous transaction. So take note that the RAO will only be applicable for disbursements, not on the collections or income. So as you can see, the cash national treasury, rather MDS, is to be used when there is payment to be made, whether for an asset or expense account. First stop, personal services. For personal services, example of this would be the remuneration, the salaries and wages of the employees or the rank and file personnel, or those who are to be paid with salaries, including the line managers or the upper management of the different government agencies. So here are the following payments or methods. So there could be a disbursing officer to be set up, or there could be an authorized depository bank, wherein that is through ATM or checks. In today's world, of course, number two is going to be the, let's say, comfortable, or let's say the most comfortable and reliable one. I would say that, since we can also do it online and real time. Okay, so here's an example. You have here the computation of the net payroll of an employee. You have the total compensation, gross income, less the deductions, taxes, and the government mandatory contributions, GSIS, pag-ibig, and PhilHealth. Now, GSIS is the counterpart, of course, of the SSS. SSS is for the private employees, social security systems, but GSIS, government services insurance systems, would be under the government and would be handling the related retirement benefits, sick leave, disability, etc. for the government employees. So these are the following deductions. For sure, you have discussed this somewhere in your other subjects, and the net payroll would be this amount. Now, how do we record this one? So if, for example, we set up a disbursing officer there, so what we do is that we provide cash to our disbursing officer, so in the amount of the net payroll. So we are going to make this entry. However, prior to that, there should be entering of obligation to the RAOPS. So how do we make a memorandum entry? If there is RAOPS, actually, that's again Registry of Allotments and Obligations. The allotment would be, of course, stated. The obligation would be 520, just a minus. But if we are writing, because we cannot make like similar ledger if we would like to, or subsidiary ledger type or illustration. So what we do is that we just have to make it like in words. Enter obligation for gross payroll of 520 pesos in the RAOP. So we don't have to write Registry of Allotments and Obligations and Personal Services. Or we can also use the word record. So what are the important elements? The words enter on the record should be there. There should be the word obligation. If it is an allotment, it should be there, allotment, or appropriation, it should be there. Then what are we paying? Is it salaries? Is it for supplies? Is it for construction of the building, etc.? Then the amount and the specific registry. So those items should be present when we state the sentence for the memorandum entry. Then here are our net payroll. Okay, so it is advanced to a disbursing officer, and you have here the entry. This is our first entry for receipt of cash to the disbursing officer, and you also have the credit to National Treasury MDS. So after we have recorded this or made this entry, we now have to record the payment of the payroll to our respective employees or government employees. So debit all items for compensation. Take note of these terms: additional compensation and personnel economic relief allowance, or PERA. So these acronyms are there. However, in journalizing, we really have to spell out. Then we are going to credit the different dues to the different government agencies, whether that's BIR, GSIS, Pag-ibig, or PhilHealth. Due to BIR is for taxes, and then these are the government mandatory contributions. The net amount would be for payroll. After that, we also have to recognize another set of accounts. This is for the respective employer's share. Remember that GSIS, Pag-ibig, and PhilHealth will also have the counterpart of the employer. This is for the employee's share. This is for the employer's share. And you can notice that we have equal amounts. Now, that is not true in real life. We all know that there's a table in which we have to follow the respective amounts for GSIS, for Pag-ibig, and PhilHealth. All right. After that, we have to remit the total amounts here, GSIS, Pag-ibig, and PhilHealth, so that that would equal to cash National Treasury MDS. And that is 160, total of 160 pesos. All right, so this is the total remittance to the different agencies. Then what about the due to BIR? Of course, you have to pay that later on. So that's, for example, due to BIR, debit and credit subsidy income from national government 20, because we assume that the amount received is net of tax. All right, unless it's stated in the problem, wherein we credit cash National Treasury MDS if it is really stated that the amount of allotment received and the NCA is with taxes. Okay, that's for PS or personal services. Now, what about for maintenance and other operating expenses? We have to take note again that for expenses that are prepaid or prepayments, we have to use asset method, meaning we record that as an asset. Then if we're talking about inventories in terms of recording, meaning what should be debited and credited, we have to use inventory or merchandise inventory or supplies inventory. Therefore, that's perpetual inventory method or system. On the other hand, in terms of costing or valuation, we use moving average cost. So that is the method we're in. For every movement, there's a purchase, there's a sale, there would be certain movements of costs. What would move the cost? It would be the purchase, another purchase. But if you are selling a particular item, the cost or price would remain the same because that's selling the balance of the inventory. But if there's additional purchase with different costs, it would change the unit cost. Of course, that is true in accounting for inventories. All right. What about if petty cash fund? We use impressed fund system, wherein no entry will be for payments, only for replenishment and unreplenished vouchers. Here, though, if supplies and materials are purchased out of petty cash fund, then they are to be taken as outright expense. Supposedly, petty cash shall not be used to purchase supplies for stock, but just in case they are to be used, so outright expense, meaning that it's just for emergency purposes. Okay. Here's an example. What if for rent? So this is prepayment for 3 months. So debit that to the asset and credit to the cash account. Next, supplies and materials. If there is purchase order, oh, by the way, going back. So prior to payment, there should be an entry in the RAO, right? RAO, MO, Registry of Allotments and Obligations, Maintenance and Other Operating Expenses. So that's RAUMO. That is where we are going to record the obligation. Always record the obligation if that is an expense or a capital outlay. Next, supplies and materials. First, for purchase order, no entry, of course, but it will be a memorandum in the RAUMO. So state the word enter or record obligation, the item that is to be recorded, office supplies, what registry, RAUMO, and the amount. Then now we are paying, right? So meaning this is on cash basis, not on account. Okay, so that's debit to the asset, credit due to BIR, and credit the balance, cash National Treasury MDS. That's 60, then 555. Another one is withdrawal. This is what? Okay, so using now, getting the amount from the balance and using that for the operation. So meaning that's an adjustment, adjusting entry to expense, debit expense, credit inventory. And finally, we have to record the issuance of TRA, the tax remittance advice, in which again, we assume it is net of tax. The NCA is net of tax, so that's why we are going to debit due to BIR 5 and credit subsidy income from national government 5. All right. Another example, cash advances. For cash advances, these are the following items. So this is to be recorded first for this one to RAUMO. So Registry of Allotments and Obligations, Maintenance and Other Operating Expenses. So that's the respective memorandum entry in RAUMO. The second one is release of the cash advance. So we debit petty cash fund, setting up of the petty cash fund. That's the second one. And the first one, we just have to make it a memorandum entry. But later on, because the amount is released, that's why we have to set up the petty cash fund. Then number 3, request for replenishment. Remember, for this one, that would be recorded as a memorandum entry. And when the actual replenishment is made, that is the time that we are going to debit the expenses, credit cash. That's the ruling under impressed fund system. What about for 5, liquidation? So this is the time for unreplenished vouchers. So office supplies expenses of 80 and traveling expense of 20 and credit the petty cash fund. Then what about for the balance of unused PCF? For the unused PCF, so we will debit cash collecting officer of 20 and credit petty cash fund of 20. So in that case, we are going to, in other words, return the balance of the petty cash fund. So how much really is the balance? 120 minus the liquidated 80 and then 20. So that's 20 balance, right? Okay. Then another one for financial expenses. This is now on RAOFE. RAOFE, these are the following expenses. So bank charges and interest expense. First, we have to record the obligation in RAOFE for 5 pesos and 8 pesos for bank charges and interest expenses, respectively. Then that's the time that we are going to record. This is payment. So we debit bank charges, credit the cash in bank local currency current account. If you can notice, we are using another account here. So this is for bank transaction. So this is in the bank. So that's why we are going to credit the LCCA. LCCA means local currency current account. All right. But if we are using the MDS, that's also okay. Then what about for RAUFE? Remember, interest is normally accrued. It's stated here upon receipt of the bill. So meaning that is received by us in a form of a billing statement. Therefore, that's a liability. So credit accounts payable here, or it could be interest payable, or for some, accrued interest expense. Then if we pay, so debit the liability and credit the cash account with the equal amounts. All right, that's for the RAUFE. So easier as compared with the others. Next, what about purchase or construction of fixed assets? This could be challenging. Remember, we are going to use the construction period theory, which means that we are going to record an asset depending on the percentage of completion. That's also according to, or in accordance to IFRS 15, revenue from contracts with customers for long-term construction contracts. Then depreciation starts when the asset is already available for use. So meaning we assume that it is when the construction has been completed. Then we capitalize all incidental expenses or directly attributable costs that would be useful for the asset or that will enable the asset to be useful for the intended use of the management. Then after that, we are going to depreciate using straight line method. And as what I've said, the percentage is 10%. Okay. So here are the following classifications. So the assets, public infrastructures, and so on. Public infrastructures, if we're talking about roads, bridges, railways, to be used by the public. If it's still in progress, so we use the CIP, construction in progress account. And upon completion, that's to be entered in the Registry of Public Infrastructures. All right. So here, the registry, of course, will be for the classification of that particular constructed set. So meaning while it's constructed CIP, and then it will move to public infrastructures if done, and to the registry recorded. That's like a ledger account. So here, example, this is still for office equipment. PO, again, there's no obligation per se, accounting-wise, that would form part of a journal entry, but that would be a certain memorandum entry in the RAUCO. Another one would be for the office equipment, that is for accounts payable. And the third one would be for the payment for the office equipment liability. So accounts payable 150, then the tax is at 10, which is given, although we assume again it's at 10%, if not stated, and the difference is cash account. Next, for case 2, construction of building by contract, there are many items here. So first is the signing of the contract. That's going to be a memorandum entry in the RAUCO for 200 pesos. Next one is 30% completion. That's 200 times 30%, 60. It's given though. But then there was payment already. This is not yet the completion, the percentage of completed portion of the contract. It's just an estimate based on percentage. So that's going to debit advances to contractor, which is a receivable, and credit cash national treasury MDS. So later on, this receivable will be applied to our respective billings later, which we will see. So we received a billing out really of the 50% of the contract price. So there's no statement here, no additional info, what really is the percentage of completion. So we just assume it is, let's say 50% of 200 is 100. Advances to contractor is 60, so the balance of AP is 40. Next, number 4, for the accounts payable, you have here the liability. I think this is the payment now of the billing, so that's 40 only. Then 8, withholding tax given, 32 cash national treasury MDS. Then after that is there's 100% completion already, as being stated here. So debit CIP, agency assets, construction in progress agency assets, 100, and credit accounts payable, 100. After that, we now have to pay it to the construction company. And that's why we will debit 100, which is 50% of the contract price of 200, then 80 for the net amount. The due to BIR or the tax, withholding tax, is given at 20. Since the contract is already finished, so we are now ready to transfer the CIP account to the building. So that's why we will debit buildings and credit CIP construction in progress agency assets account at 200 pesos. Then after that, you have the due to BIR account, which is the withholding tax payable at 28. Then credit subsidy income from national government. So this would be our entry again in case that it is silent. So the problem is silent as to whether the NCA is with tax or without tax. So if silent, we consider it to be without or net of tax. So debit due to BIR and credit subsidy income from national government. Total of 20 and 8. So here it is. Where's that? 8 rather and 20. So anyway, if we reverse the components of addition process of the same total, 28. After that, case 3, what about if general repair or construction of building by administration? So in that case, we are going to debit construction materials inventory for the materials purchased, and then we are going to credit for all materials issued and labor paid for the construction or repairs with a corresponding, yeah, that's the debit again to construction in progress agency assets account. So in this case, it's like the first line here discusses that when there is acquisition of supplies and building structure, so we are going to debit to the inventory account and credit whatever appropriate payment, or if that is accounts payable, so credit accounts payable. Later on, when there is the construction of that, so we will debit the CIP. So just like here, the CIP, and we are going to credit, for example, if we use the materials here, so we are going to credit construction materials inventory. And then also for the payment of the labor in that particular case. Then upon completion, so we are going to debit construction in progress agency assets account. Debit if that is still, for example, on the respective progress of the project. However, if it is done just like this one, we are going to transfer it from, of course, your CIP to the respective asset account that is constructed. If that is building, so debit building, credit CIP. So more or less, this is going to be same concept as here. But what is lacking here is labor. If there is labor, we are going to debit the CIP, of course, and we are going to credit the appropriate account that is paid for labor. So let's say it's going to be cash. So just credit cash in bank for the labor. And if it is mixed with other items like the factory overhead, so credit also cash. So meaning, because these items are capitalizable to the asset, remember, if they're capitalizable, we debit them automatically to the asset account. They're not expense because labor is capitalizable, unless that's salaries. So we will debit salaries expense. So you know these already for cost accounting. Remember, under cost accounting, that for the cost related to the asset which are capitalizable, we have to debit that to the appropriate asset account. Okay, that's case 3. Next, case 4. What about purchase of land and building? So this is lump sum acquisition. So this is also called the basket acquisition, wherein we acquire 2 or more assets using one price. So here it's 300. That's why this is Rauco, by the way. So we make a memorandum entry. Assessed value of land is 180. So meaning the value of the building is 120. Okay, so that's how simple it is here, although we've known in financial accounting that there could be some items like we have to allocate really the value of the contract, like this one, 300. Anyhow, if the value of land is 180, So the building, of course, is, let's say, another amount. So the value of the land and building here would be different. But anyway, that's how it is shown here. So we'll just respect it. Anyway, no given value of the building for assess the fair value. Because supposedly we will allocate the price of 300 based on their fractions developed out of their fair values. Okay. After that, accounts payable debit 300, and then 10% withholding tax is 30, and the credit is cash national treasury MDS. Then another one is the payment of the withholding tax. So that's 30. So due to BIR 30 and credit cash national treasury MDS 30. Okay. And finally, this is for the RAU items, so Registry of Allotments and Obligations items, and RAUCO probably because this talks about land beautification project, which is non-current asset and PPE normally. So in an interagency transfer, it is possible that a certain agency receives money from another agency than from the national government or from the DBM to do a certain project. So we have two terms here, the SA and the IA. SA is the source agency, meaning the agency that provides or transfers the money or resource, while the receiving agency is the IA, or the agency that receives the money transferred. All right, so in this example, agency ABC, which is the source agency, transfers cash to agency XYZ for a land beautification project in which XYZ, the latter, is the implementing agency. So in that case, we have to enter the obligations in RAUCO. If we are, this is on the part of the source agency, by the way, ABC. Now, number two, cash is transferred. So clearly, if cash is transferred, so we are going to credit the cash account. Then we are going to debit the due here. This is the due from NGA, National Government Agency, Agency XYZ. So what is this? What is the point of this? This is a receivable. Receivable by Agency ABC from the national government. There is a receivable because supposedly the NGA should forward or transfer money to XYZ, but perhaps because of many reasons or whatsoever, so the ABC is given the directive or direction by the national government to transfer the money in behalf or in its behalf. So that's why we have here this entry, a receivable. And after that, if there is already the usage of the money for the respective beautification project, so simply close that to land development. So debit land development in that case. Credit due from National Government Agency, Agency XYZ. By this entry, I suppose that Agency XYZ is like getting the money or receiving the money rather for the project that it has to make or administer for the ABC agency or agency ABC. Because in this case, it is agency ABC that recognizes the asset debit land development, right? It's like agency XYZ is hired for the project. Anyhow, that's the illustration. All right, so we're done for accounting for obligations and expenses. Ooh, that's quite long part here. Next, what about for income, collections, and related transactions? No registries to talk about, so simply we have to record the said income and collections. Then in recording, so we have here, for example, this is for the taxes and other sources of income, operating and service income, grants and donations, borrowings, and miscellaneous receipts and collections. So we have to take note that our entries would depend upon our authority or the authority given to us by the government. Is it without authority to use, with authority to use, or with authority to use, but with limitations. So those are the three situations. Although here, the two situations only are shown. But for some books, really, there's the discussion involving with authority to use, with limitations only. So we cannot go beyond the given amount or stated amount. So in this case, if without authority to use, so all revenues collected by the agency will be forwarded or remitted to the National Treasury account. And therefore, the collecting agency shall maintain national government books. And then the collection shall be credited to the income account of the collecting agency, and which shall be debited upon the remittance to the National Treasury. So here it is. Example, the BIR, in the case of BIR, so it collects the income taxes from individuals, so debit cash collecting officer, credit income taxes individuals of 100, and later on, that's to be remitted to the BTR or Bureau of Treasury. So debit the income taxes individuals 100 and credit cash collecting officer also at 100. Then after that, what about for Bureau of Customs? So same concept, receipt of cash. We now have a new account title, cash collecting officer. Remember cash disbursing officer a while ago for the obligations and expenses. Then credit, for example, now the excise tax on articles, the income, and reversed when there is remittance now to BTR. Also true for motor vehicles registration fees. You can really see it here. So debit cash collecting officer registration fees for the income account and close it when remittance is done to the BTR. All right. What about if with authority to use? So meaning the collected money can be used for the operations. Example, we received a bill for the office space rented by our tenant. So we have the space, meaning that's an income. So we make an accrual of that. So debit AR, credit rent income of 20, or for some, probably the debit could be rent receivable or accrued rent income. Then second one is collection. So debit cash collecting officer. You can notice that there's really a collecting officer and a disbursing officer or officers for cash. Credit account receivable. So we have to use that. Then another one is for the cash in bank. So for cash in bank, we now have our another account. So the cash in bank LCCA, then credit cash collecting officer for another. Next would be the repairs and maintenance office building, which is used for this purpose out of the collections that we've made. So as what we've said, this is the case or situation of the so-called with authority to use the money. Then another example is for inspection or service fees, wherein the amount is used for payment of overtime services. So debit overtime and night pay, credit cash and bank LCCA. LCCA again means local currency current account. So that's how it is for income and collections without authority to use and with authority to use. What about if with limitations? So we just have to be careful about the limitations set by the national government. Could be, for example, amount, the maximum amount, or only certain expenses that we are allowed to. Otherwise, if not allowed or we are already beyond, meaning we don't make use of any subsequent collections later on. Let's say you are only allowed up to 3 million pesos. So if you get the, or we get the cutoff or maximum amount, so the next collections no more. Or let's say you can only use this particular money for certain transactions involving, let's say, payroll only or this particular account. So meaning if it's another, no use. I think that's basic. Next, the financial statements. Well, we all know these things. We know that in the old, there is 4-column or trial balance of totals and balances that was required. But we have learned in accounting 1 even that we use the trial balance of balances already. So whatever the balance there is, whether debit or credit, we include that. for the trial balance. Then under the new system, that's only going to be the two money column, right? So two money because there's debit and credit. In four column or trial balance of totals and balances, of course, remember for every account, there could be balance or there can be total on both debit and credit, right? For an account. And then for another situation, like let's say that's an asset. So for an asset, it has debit and credit total composing the balance. While for credit, it would also be debit and credit total. So that's going to be four in all. But then under the new system, which we have learned again in the basic accounting, that we only get the trial balance of the balances for each account, debit and credit. So meaning two money columns. We know this already. Next, adjusting entries. For adjusting entries, we follow whatever we have learned from accounting one. Closing entries, so same that we have known, especially in our corporation accounting. Let's go to the steps. So here, before I discuss the other one, close all income accounts to income and expense summary. That's a check. We have known that. Next, close the expenses. Next, whatever is the balance, whatever is the amount for income and expense summary, whether that's going to be, let's say, credit. So that's going to be, let's say, credit if, for example, that is profit, right? That's going to be a profit, meaning the revenues would exceed the expenses. And then the opposite is true. However, if we are talking about the income and expense summary account, rather, or then really the income expense summary, because the income has a balance of the credit. So for it to be closed, we put it on the debit side. So income and expense summary is on the credit. For expenses, expenses have normal balances of debit. So the income and expense summary would be transferred or placed to the debit side so that the expenses would be on the credit side. Therefore, if there is profit, so income and expense summary is found on the credit side. For it to be closed, we put that on the debit and pair it with the retained operating surplus. This is the version for retained earnings of corporations or accumulated profits and losses now. Then after that, we, of course, adjust retained operating surplus or earnings if there are any prior period adjustments, meaning the prior period errors are to be adjusted directly to the equity account. Then whatever is the balance of the retained operating surplus, we close that to government equity. So this is really true if it is government accounting, because if this is corporate accounting, the fifth one, remember retained earnings is one account. It is not close to government equity, but it is a component of the equity. So those are the 5 steps, but there is an addition. So we have to close, in addition to the nominal or temporary accounts, the unused or unutilized, another term for unused NCA. So remember, if we are given the appropriation and then the allotment and the NCA, remember, not all NCA given by the Department of Budget and Management or DBM will be used or utilized. So example, the NCA received is 100,000, but the checks issued for payment is 90,000. Therefore, there is unused NCA. And let's just make a closing entry that is a reversal of the entry that we have known and we have made when we received the NCA from the DBM. Okay, so debit subsidy income from national government and credit cash national treasury MDS. All right, for financial statements, well, the same. Of course, worksheet is optional, but in terms of practice, that is really usable so that it would be easier for us to prepare the financial statements. So we have the statement of income and expenses. This is statement of comprehensive income or income statement, the statement of financial position or balance sheet, and the statement of cash flows. So we have known these things already: performance, financial position, and the cash flows. Then for cash flow statement, the 3 activities that we have known: operating, investing, financing, effects of foreign exchange rates, because there can be changes on the amounts of the respective foreign currency accounts. Then other items. So net increase or decrease in cash in that period, plus the balance of the previous period equals the current balance. And 6 is disclosure, non-cash items. Okay, so here are the examples of operating activities. So these are the items found in current assets and current liabilities or working capital that are to be used in the short term. So these are the cash flow from operating activities. Next, for investing activities, we think of the items that are for the non-current or long-term assets, such as PPE, long-term investments, the inclusion also of investment. Okay, so investment in debt and equity, but it's not debt and equity that's found on the credit side or liabilities and equity. So investment in shares perhaps or investment in bonds. So these are long-term or non-current assets, intangible assets even. For financing, we think of the long-term liabilities and then also the equity or the equity components. All right. Let's go back to operating. So certain items here that are not perhaps known by us prior to government accounting discussions. So NCA, then interagency transfers included. Next, for cash outflows, the return of unused NCA and interagency transfers. So these are the less common ones for, or peculiar ones for government accounting. Next, effect of foreign exchange rate changes. What I've said, if there are certain foreign currency transactions or foreign currency denominated deposits or cash items which are not restricted. All right. Then cash flow can be income statement approach known as the indirect method and the balance sheet approach known as the direct method. For the direct method or approach, which you can just see that on the T account. So changes on the T account. Income statement approach is like using the profit or loss and working back to get the net cash flow for operating activities. So take note that these methods are only for the operating activities. Financing and investing would still be the same with whatever approach that we use. And then another one is the chart of accounts, which is very long. So here are the complete list of the account titles. We even have the joke, so let's just scan it. Okay, so look at it from assets down to equity or income. There was even a joke again that if anybody can memorize all these items, you'll be given flat 1 or 1.0 for this item or for the course even, which is quite impossible. Like, can you memorize the codes and the account titles? I don't think so. And shall we waste our time by that without knowing more important things? I don't think so. Anyway, there is a software that will take charge of taking note of all the account titles. Next, for financial statements, okay, we know this from financial accounting and reporting, but this is like quite long because of so many account titles. But we can improve this one by using notes to financial statements so that we can have 1 page to 2 pages only statement of financial position. Other items can be placed in the respective notes. If this is financial accounting, but this is government accounting, so let's respect their format. Then that's income statement. All right, that's income statement. And if it is condensed, so condensed meaning there's disclosure in the notes for what composes income and expenses. So that's allowed. And cash flows using the balance sheet approach and using the income statement approach. All right. So that formally ends government accounting. So hopefully you learned something for this session. And I'll see you next time for another lessons under advanced financial accounting and reporting. Bye for now.